Most people portray trading as something very simple and easy to do, and it is. It's just basically a click of the mouse button and looking at a few charts, right? But the problem is that most people don't understand how difficult it is to profit over the longer term. Because what we see on YouTube and other places are people making it look easy. Huge profiting trades in a few minutes, big flashy cars and houses and materialistic things, but nobody shows a long track record. And the reason why is because just about everybody that you're watching is over risking their account, and they don't want you to know that. So let's show you a few of my accounts, high risk trading, to show you what happened in the last 2 weeks to my accounts trading like this. Because nobody else is going to show you what happens behind the scenes because they don't want to look bad on YouTube.
Okay, so here we are on the Aussie US dollar. This pair has caused my RMI Pro strategy to basically break in its current form. You can find the strategy on my website. You can see that currently it's showing version 2.6. This is going to be updated or taken down and then updated later on this week. So the RMI Pro is a high risk, high reward strategy. It trades a lot every single day at 20 to 60 times. It looks for a lot of profit of 15 to upwards of 60% profit every single month. But this is a high risk trading strategy, and it's something that I'm not going to be supporting anymore because I don't think that this type of trading is valuable to anybody. I think it can be done in a profitable way if you're very careful, but it's still a gamble any way you look at it. And I just don't want to be part of that anymore. So what happened to for me to actually get to this point? So the Aussie US dollar has had a lot of action lately. It's been moving up in a big uptrend, as you can see here. And this is my trading strategy, and I'll explain it a little bit. But you can see the move here and the pullback. So the RMI EA Pro looks for these pullbacks in the market to take its profit. So it looks for traders pushing the market up and then profit taking and then trickle down a little bit, and that's where we get our profit. The issue here is that last week the RMI strategy, the RMI Pro strategy, entered a bunch of trades against the trend, looking for traders to to find an area of profit and for it to shoot back down. Well, the issue here is that it didn't really happen. There wasn't enough profit taking to happen. There was a lot of buying on the Aussie dollar, and it kept trickling up and up and up until the strategy basically broke and we had a margin call. So these kind of things happen. Every strategy has a weak point. And my strategies don't have a lot of weak points in the methodology, but the market will exploit those weak points eventually. They'll happen in causing our strategies to break. And that's why you probably have lost money in the past. And what happens and why this happens is because we're over risking. A lot of times we would survive using the strategies that we're using, whether that's a system or an algorithm or something else, if we just didn't over risk. So, what does over risking actually mean? And what does that look like? Any strategy that's trying to profit more than 5 to 7% is considered over risking or high risk in my book. And high risk trading means that you're potentially gambling and you're likely to lose money, whether that's in your entire account or a good portion of it at some point in your trading in that strategy at that risk level. So here we have version 2.6 of the RMI strategy. So this was a less risky version of the strategy, but still considered high risk, looking for 15 to 20% profit every single month. And you can see the first entry here was looking for a continuation of the trend on the upside, and it just fell like a ton of bricks and got us into trouble, lots of entries. And you might be thinking, well, why enter so many times against the trend? It's guys, you just never know when this is going to bounce up. It could trickle down and shoot back up from that point, and the trend could continue. But we just don't know until after the fact. And so you can't say that, oh, why did you enter on the down here? Because you never know. You just never know. So the strategy was looking for a bounce anywhere in this whole move down, back up. It never happened. We're starting to get some of it here. We'll see if it actually continues. But at this point, it doesn't really matter because this strategy, the RMI Pro, is going to be getting a big methodology, complete overhaul of the methodology and strategy is coming later on this week. And it's going to look way different, and it's going to cut the risk down. It's going to make this strategy, this high risk strategy, into a low risk strategy moving forward. So hopefully something that you guys can get excited about, but that means cutting down on the risk and the reward, potential reward a lot too. So this isn't something that you're going to be able to profit 15 to 20% a month anymore, but it's something that you can feel more secure and safe with. So for example, if you go to my RMI EA version 9, so it says this is version 8, but this is actually using the new update version 9. You can see that the strategy has been really consistent on this account over the last 4 months. So 2.9%, 3.3, almost 7%, and so far 2.6. So we're looking at maybe a 5% increase on this account for the rest of this month, since we're only at halfway through. So this strategy also has been going on since 2019. On this test account, you can see it's profited every single month. This strategy has been tested over the last 10 years, and it has been built in the risk management has been built to accommodate the worst of market times on the pairs that it's trading. And that's how I built the risk management. And that's the furthest that the expert advisor could be pushed, or the strategy that could be pushed, was 5%, 3 to 7% profit on a 500 to 1 leverage account. So this strategy is strong, and it has been strong for a long period of time. And I realized, sorry, I've got a lot of stuff going on here. Oh, it looks like it's closing out. Everything's closing out. That's got to be really annoying. I'm sorry about that, guys. So everything closed out because of the big push on the Aussie US dollars. So it looks like I squeaked by on this one, but like I said, it doesn't matter. In the end, the strategy is going to be getting an overhaul. But this is what a low risk type of strategy looks like. And you should be looking for a long track record, a strategy that has shown a really long track record, that is consistent, and not something that makes 100% per month, because that is going to result in you blowing your account, whether it's tomorrow or the next day. So you might be wondering, well, don't high reward strategies exist without taking big risk? Last week I talked about FX Daniel Savage in his account here, and how he shows he flashed his car, and saying that he's doing so well in Forex trading, and he's got all these materialistic things, and flaunts them to give people the impression that he is doing well in trading. And he wrote in on my video last week saying, "Oh, I don't know what you're talking about. I only risk 3% on my trades and look for a 15, 20, 30, even upwards of 50% profit on my trading." So the idea is cutting your losses short and letting your profits ride, right? So he's kind of incorporating that money management. But what he doesn't realize, or what he's not telling people, is that it's a known fact that the market is more likely to hit a smaller pip amount than something larger. So if I'm going to draw that out, if you have a small stop loss, you'll see something like this, lots of stop losses going down, and then you'll have a huge win, right? And the hope is that the huge win will be more than all the losses that you had. And then you'll have lots of stop losses, small stop losses, and then huge win, right? And that is what people try to attempt to do, and it keeps going, you know, right? That. So that's the kind of equity curve that people are hoping for when using a small stop loss and a high take profit, or letting your profits run. But most people that try this technique or this money management, it doesn't look like this. It looks more like this. Big win, big win, big win. that is what it looks like when using this type of money management, and sometimes even worse, because the market is more likely to hit those small stop losses than those big wins, and so you're going to have streams of losses, sometimes 10, 20, even more losses in a row, because of having that tight stop loss. Most people don't show you this though. They always show you, oh, if you're going to be trading this kind of strategy and like this is the equity curve that you're looking at, not something like this over here, which is what is typically happening behind the scenes. But most traders are not going to show you that because they're scammers, in my opinion, or just trying to get followers or make themselves look good. So this is what I'm doing with my update, the RMI Pro update, to make it less risky and to make it smarter and a more a methodology that's more adaptable. So this is the initial entry here. So this is a sell position, and it was looking for the market to go down. As you can see, the trend changed, and it started moving up, right? So we held on to that initial position. And when the trend changed, we started taking buy orders, buy, and took profit on all those buy positions while we're waiting for this sell position to close out in profit, or for the downtrend to actually continue. And the downtrend did. And you can always, that saying is what goes up has to go down, right? Or vice versa. And that's what happened here. So the downtrend came back, and we entered more sell positions, and we were able to close out all of our trades right here for realized profit at that point. So yes, this was a losing trade, and it even closed out as a losing trade, but the profit from these top 3 orders was more than the bottom position. And it's because we had a slightly higher risk level on these positions here. Not a lot. It's not a heavy martingale. It's a small martingale money management, but it also allowed us to close out these positions in this way. But the cool thing is that we were able to profit on the other side of this while waiting for those positions to close out. So this allows us to not get stuck in a lot of positions on the wrong side because we're taking trades with the bigger trend. All right, so this is the RMI Pro version 4 that's going to be releasing on my website later on this week, maybe in the next 24 hours, I don't know. But it will be a big update that should cause the RMI Pro to be not a high-risk trading strategy anymore, but something low risk along the lines of the RMI EA version 9. Now you may be wondering, what's the difference of these two expert advisors? The RMI EA version 9, which you can see here on these accounts right here, on the test account here. This is a range trading strategy, and it's a counter trend range trading strategy. So it also on the bigger side of things, it looks for a very similar thing as the RMI Pro, but on the bigger picture. So it looks for those pullbacks in the market. The RMI Pro is going to be a trend trading strategy, and it's very similar to what you see here on this. So we have the EMAs, right, going up, and we have the entry here, entry, 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 and entries here. So these are the big winners for the strategy. And this is what basically you're looking at the strategy right now, the RMI EA Pro in its new update coming out later on this week. So you can see that the big moves, the good entries, very clean. And the thing is that you might be thinking, "Whoa, the strategy looks pretty amazing," because you can see the EMAs have to be crossed above, in order for us to take these entries here. And it's the same thing on the other side. So the sell side, excuse me. So here, EMAs cross down. We have our entry, our arrow entry, and vice versa. So all these positions are valid entries, and they're actually really quite good. The strategy is very sound. So some people trading high risk or with any system may be thinking, well, if I have these 1, 2, 3, 4, all these entries right here, what if I waited for the best possible entry? And you might be thinking, well, this is probably the best one, right? Because it's the first of the move. But I know that there's some traders out there that think that really good discretion is going to help them with their trading in in their system, their trading strategy. And I'm actually starting to move away from discretion and thinking that it's basically all of trading. I'm going to have some people to disagree with me, but think about this just for a second and let me explain. Discretion can be powerful, but is it just postponing the inevitable loss? For example, we have these three, 1, 2, 3, 4 positions right here. Which one is the best position? Well, automatically you're going to say this one, right? And you're going to say the worst one is up here because it's at the top of the trend. But there's no way of knowing that this is the best of the 4 signals. This could be also have been one of the better ones as well if this would have continued back up. But the thing is that we don't know that until after the fact. And we don't know that until we see this start moving back down and that this is not the best position. So a lot of people think that discretion is the sole purpose of trading. And I'm saying that discretion is postponing the inevitable of a potential loss. So it's no different if I took this position. This trade right here is no better than this one or this one because I don't know the future. I don't know what's going to happen. And there's no distinguishable difference between this trade being good and this one, or this trade being the worst and this one being the best until after they've already happened. Okay? May not make a lot of sense to you, but hopefully you can ponder on that a little bit to make better decisions with your trading. And thinking that because I have good discretion means I'm going to take more risk on this particular position rather than this other position, when both positions could easily lose. And that's the problem. So there is no good trade and no bad trade within your strategy. They all can be bad trades depending on what happens with the market. Okay, so my idea with stop losses, and I wanted to clear this up in this video, and that's why I'm going a little bit longer here, is that stop losses or trading in general has, for most people, has 3 predictions on every position that you take. So there are 3 predictions that you're making on a position that you enter the market, so a trade that you enter the market with. The 3 predictions are the entry point, okay? The second prediction is the stop loss. The third prediction is the take profit, okay? So those are 3 predictions that you're making on every single trade. Most people don't think about it and they think, oh, I'm only making 1 prediction, thinking that, oh, okay, if I'm buying here, I'm thinking that the market's going to go in my favor. That's the prediction. Well, the thing is that you're making predictions on the market hitting your take profit, and you're making a prediction on the entry point of it actually moving in your favor, and you're making the prediction on the stop loss as well. And the problem is that there are 3 predictions in every position that you take if you're using a stop loss and take profit. And that's a lot of things could go wrong with that prediction, right? And so if you can eliminate 1 or maybe even 2 of those, then you're in a much better position. And that's how I look at it, is that if I can remove the stop loss prediction, that means that I'm in a better position on coming out in profit because I'm taking that out of the picture. Now, you may be thinking, well, you're still making a prediction because then you're making a prediction that you won't get hit with a margin call or that stop loss isn't going to go totally against you. But the thing is that if I have my risk management set in a good position where I can re-enter the market and make that trade, that bad trade, into a good one, then I have much more potential to come out in profit over the longer term. So that's the way I look at the market, and it's why I've been pretty heavily against stop losses and why I think that most prop firms are scams, because they are, well, I guess scams may be a heavy word, but I think that a lot of them are trying to take advantage of traders by using tight stop losses that causes them to lose more of their account than actually come out succeeding in their challenges. So this is how I view the market. Hopefully, I cleared up a few things, and hopefully you guys found some entertainment or at least some knowledge in this video today. And if you liked it, give me a thumbs up. And if you're new to the channel, hopefully you can subscribe. Thanks so much for watching. See you next time.